Good morning. I will be with you shortly. I will be with you shortly. Okay, so a couple of minutes to go. And I have posted a message. So let me just read that message to you. It's the 8th of September 2025, and the European session is about to open in approximately 1 minute and 30 seconds. This is my first trading session with you for 2 months. When I started trading live in January 2025, I deposited £10,000 into one trading account, which is the one that I use for display on Trading Live. When I stopped at the end of June for a long break, I had grown that account to £40,000. In order to avoid temptation to trade, I decided to withdraw the money, and you'll see that up here I withdrew £40,000. In my preparation for starting up today, you would have thought that the first thing I would have made sure of was that my account was funded. But no, I was making sure that YouTube was working, OBS software was working, Divergent was working, software was updated, and I completely sweated out that I had withdrawn the money. So last night I made a bank transfer, but I imagine it being on a Sunday night, it hasn't registered yet. But I'm quite certain that it will be up and running by the time that I trade the US session later on today. Okay? Some of you have kindly suggested that I trade a demo account, but you know what? It's not that important to me. We're just gonna have to, accept that that's how it's gonna be for this morning. So first of all, allow me a moment of sentiment and saying thank you so much for your messages of support. Thank you so much for telling me that I was missed. I want to assure you that the feelings were mutual and reciprocal. I have, in fact, missed you. What I've spent the last 2 months doing, I'm happy to share with you Perhaps not this very moment, because the market has just opened and I'm sure you are as keen to get tucked into it as I am. But as you can see, the funds have not hit my account yet. So quite how we do this, I don't know. I wonder if I can... No, I don't think... By the way, my clock is completely out. It's only just turned 8 o'clock in UK and 9 o'clock in Europe this very second. I can't even pull off a half a lot size. So anyway, doesn't matter. I imagine that what happens if I click that, it will just say, no, can't do it because the margin requirement is 59. I can probably do a FTSE. Yes, I can do a FTSE. Okay. I will swap over to the charts momentarily. I just need to... Just need to make sure that I got all the charts up that I need. So let's take a quick look at what's going on. My last trading session with you was back in July, end of June, and back then the DAX on the last trading day in June was trading around somewhere between 23,850 to 24,000. And the following day it traded down to 23,600. And that horizontal line there represents where we left each other, so roughly. And as you can see, the market has been higher, it's been lower, it's been higher again. And so fair to say that we are in a trading range in the DAX. And where I left you is exactly where we are right now. The software that I'm using is something that you can download from a channel that I have created on Telegram called Trade from Charts. If you look at the description in the YouTube description for this video, you will see where you can download that. So right now, we can see that the DAX is trading above the overnight range. And we have a gap up from Friday's close. Okay. The FTSE, when I left you a while ago, was trading at 8,800 for all intents and purposes. So the FTSE has significantly outperformed the DAX in the last 2 months. And seemingly the FTSE is just about, you can see the countdown timer here, the FTSE is about to print what I call a first bar negative. FTSE is also significantly gap up. And I would like to be a buyer of the FTSE. Should we trade below the low of this bar here, which will close in about 15 seconds. It's called a first bar negative, and is based around the research that I've done in the FTSE whenever the first bar is negative. So here we go. Here we go, as in that was the first 5-minute bar. And you can see my software is now triggering an alert to say that I should contemplate being a buyer down here around the lows, which happened at 9,221. So any fill below 9,221 would be good for me. And just going back over to the DAX. Just checking to see if the money had turned up. Still hasn't. Stand by. So I'm buying the FTSE here. So I'll show you on my account. I have bought the FTSE at 9221.4. Let me just post that in Telegram. There we go. Let's look at the DAX. So I'm just taking a screenshot of something. I want to show you something. So in 1990, a gentleman called Toby Crabel published through a company that is no longer in existence called Traders Press. Don't know if you can see this, probably no, can't. Well, Traders Press was a trading publishing company, trading book company, run by a gentleman called Ed Dobson. And this book here, and I have a copy of it, the original copy. It is, a typewriter written. It is incredible. It's called Day Trading with Short-Term Price Patterns and Opening Range Breakout. And in this book, Toby Crabel goes through a series of mechanical trading strategies. Now, what he's not doing is he's not going through this particular one here, but one of those questions that traders ask themselves when they trade a breakout strategy is to say, well, what's the opening range? And the opening range is user defined. And what I mean by that is it is defined by the user trading it. So for some traders, the opening range is the first 1 minute bar. For some, it's the first 15-minute bar. For some, 5, some 10-minute bar. For some, it's just the first 30 seconds. And as I said, it's user defined. But one of the obvious candidates for the opening range breakout would be that you break above the high of the first 5 minutes, or you break below the low of the first 5 minutes. And indeed, people like John Piper, Mark Austin, Cameron Malik, traders that I know very well, have at some point or another in their careers as educators promulgated the hypothesis that this was a good trading strategy. And I indeed myself have traded the break of the first 5 minutes. Unfortunately, I didn't have good results with it. However, instead of dismissing it altogether, I got hold of data I'll show you how that works. There's many ways of getting data. If it is data that you seek, 1 second, see if I can just at least show you what I mean by that. So here, for example, is the FTSE on a 5-minute chart. Looks like I've been doing some research here because the time template isn't right. That's better. And what I would then do when I do my research, I would go back in time, and this particular charting package I have set up so I can have data for the last 15 years. And then I will pose that question that I think is an important question to pose whenever you develop a trading strategy or you're trading a strategy, and that is, fine, but what if I had done the opposite? What if instead of selling short below the low of the first 5 minutes, I buy? And armed with the data, I went through what I believe at the time was 5 or so years worth of data for the FTSE 100 index. And then what I then did was I then began to differentiate between, is the opening bar positive or is the opening bar negative? And I found that if the opening bar was negative, it would make statistical sense to be a buyer below the low, with a stop loss of some parameters. I've chosen 25 points. Usually I'm quick to move my stop loss up if I am in profit. And this was irrespective of whether it was a gap up or a gap down. And I think, yes, and I am of course fully aware that this morning that approach isn't paying off right now. The operative word here is not right now. But statistically over time, it works incredibly well. And it's a good strategy to trade. So this was inspired by, in part, colleagues in the industry and in part from a 1990 book published by Toby Crabel called Opening Range Breakout. I've just seen on on Amazon and eBay that the book is for sale secondhand for £877. I think that someone is highly opportunistic. Jesus. I do have to point out that my voice usually is not this deep. I undertook a fast, a water fast, a little while ago. And during the water fast, I then had ice baths, where you lie submerged in incredibly cold water. In this case, 2 degrees. And I'm quite accustomed to cold water, and indeed I seek it out. But it would have seemed to me that whilst I was fasting, and I was perhaps in a somewhat depleted state energy-wise, my body didn't handle that cold very well. And I got a chest infection as a result of it. And I'm just coming out of that chest infection now. So if I sound like I have a massive hangover, I don't. If it sounds like that I have smoked 40 cigarettes or 10 cigars, I haven't. I am merely just at the tail end of perhaps been pushing the boundaries a little bit. But hey, what's new? I'm currently losing 6 points in the FTSE. Let's take a look at the DAX. The DAX first 15-minute bar traded above and closed above the overnight range on a significant gap up morning. As you can see, the current account status is such that I'm unable to actually execute a trade until the funds hit my account. So if I am taking a DAX trade, I'm simply just going to have to call it out. In October, I will be doing a series of talks in America. I will be participating in the Al Brooks event in Orlando, and I will be then traveling to Los Angeles, where I will be giving a talk together, at an event that a gentleman called Dave Capablanca has organized. I will also be doing one speech at the annual Technical Analysis Organization's event in Frankfurt in late September. Have to wait a few minutes before the second 15-minute excuse me, before the second 15-minute bar is completed in the DAX. In Orlando, I will be presenting some work that has kept me entertained or engaged over the last months. The essence of it being working on the, shall we say, the segmentation of the school run bar. So if I was to show the school run bar contextually, you have some definable permutations in the DAX. You have a fixture called the overnight range. And when you work from there, you can say, well, is the school run bar, which is the one that is in process right now, in motion right now, and will finish in 4 minutes, which is the second 15-minute bar, is it trading above the overnight range? And is it closing above the overnight range? Or is it trading above the overnight range, but is closing inside the overnight range? You can add another layer of complexity to that, which I have, which is the school run bar trading above the overnight range? And is it closing above the overnight range, but is the candle positive or negative? Or is it trading above the overnight range, but it closed inside the overnight range? And is it positive or negative candle? And then you can add another layer of complexity, which I have, which is it trading above the overnight range? Is it closing above the overnight range? Is it a positive candle? Is it a negative candle? And then subsequently, is it breaking above the school run bar, or is it breaking below the school run bar? And so in doing so, I'm able to create a segmentation of the school run bars. And you can see how I also split it down into Monday to Friday. And I really look forward to giving this talk and showing this this analysis, because I think it is an extension of the work that I have already done on situational analysis, which is my special brand, my invention, so to speak, where I'm not so focused on conventional technical analysis, overbought, oversold, indicator driven, but rather focusing on how is the market reacting at a very specific point in time, and how does that compare to the, shall we say, composure of the chart at that point? Is it positive? Is it negative? Is it breaking above? Is it breaking below? Where is it breaking above? Where is it breaking below? Is it above the overnight range? Is it inside the overnight range? Is it below the overnight range? So I'm tremendously excited about actually showing this, and obviously, more importantly, trading it live. And that's the beauty of the Orlando event, is that you get to trade it live. Just going back to the FTSE, for a moment there, it seemed as if we were going to push a little higher again, but all we saw was that the sellers came in above prior bar high. So you had about 4 negative bars. Bar number 5 was a bull bar, and the sellers came in immediately. And I'm currently 8 points underwater on my first bar negative. With the gap being filled at 8208. Still no money in. So, can now see that the DAX school run bar, the SIS bar, has completed. It's an inside bar. That's not so significant because I got a close and then a higher close. Now it's been more interesting in seeing which way we're going to break. I'm just going to get rid of these lines here from aggressive school run. And I can see it better here. I wanted to show you something that I think is interesting. Looking at the VIX index, it's currently trading at 15. VIX is an indication of the volatility in the market. $15 is not quite dead calm, but not far off either. Not far off either. If I show you, I wonder if I could show you there on a different kind of chart. I'm sure I can. VIX. Oh, what is it called? It's called. 1 second. I'm just gonna have to look that up. I've forgotten. Dollar VIX. That's the one. So here's the VIX index. As you can see, we are at the low end of volatility, meaning that things are very calm indeed. I'll show you what VIX looked like during the COVID in 2020. It was all the way up in 85, came back down again and settled neatly into 20s, but here now we've been as low as down towards 10. And of course it can stay here for a long time. If you want to see what VIX looked like in the heydays where I cut my teeth on the first real real sincere volatility was in 2008 and 9, even surpassing COVID with a peak of 95. Let's talk about the DAX index right now. The second 15-minute bar, which is the one that you're seeing here, that my cursor is pointing on, is taking place above the overnight range. Get rid of this. It's taking place above the overnight range, closed above the overnight range. And what that means is that if we were to trade above 23,783, I would want to be a buyer. Now, conventionally, on a breakout strategy, you would want to be a seller below the low on a break below, which for the DAX would be 23,742, which is what you see over here. However, my research strongly suggests that when you have a structure where you have two positive bars in the DAX, they both take place above the overnight range and close above the overnight range. You want to be a buyer, which is what I call the ante. So you want to be a buyer at or below the low of the school run bar, which has a low at 41, I think it was, 42.7 to be exact. The DAX just hit 45, so it hasn't quite been there, but I would be surprised if it didn't test the 42 low area. And I'm looking at bar number 3 right now. Unfortunately, I'm unable to trade it because there's no funds in my account to do so. I'm still waiting for my deposit to be put into my account. My FTSE position is underwater. And I don't see anything on the chart that makes me think that we're headed back up again. That doesn't mean that I want to close the trade, but I don't see anything here either that makes me think, oh, maybe I should get out of this. So I have to just wait. Of course, with this extremely small trading size that I can just about afford with my current deposit, it's not exactly setting my heart on fire either. And perhaps that's an important point just to remember, is that we shouldn't really trade in a size that does make our heart go out of control. Slightly elevated, sure. Nail biting, heart pounding, probably not a good idea. One of the things that I truly enjoy about my vocation is the research. I find myself asking questions like, DAX trades above the overnight range but closes inside the overnight range. What would I do? DAX trades outside the overnight range but closes inside the overnight range. What would I do? It breaks the high of it. Would I buy it? Would I sell short? How would I manage my position? DAX trades above the overnight range but closes inside the overnight range. What would I do? Would I do an anti? Or would I be a buyer here? And then basing my decision making on reverse engineering thousands of pieces of data. Saying, well, how should I best navigate this situation? It doesn't mean that I am not confronted with situations where I'm challenged, such as, do I add to my winning position? Where do I get out? When do I move my stop loss up? When is enough enough? When do you press the accelerator hard? And I find that aspect of trading thoroughly enjoyable. I suppose you could say I'm a process-loving trader. Doesn't mean that I don't get excited if I had just bought the DAX down here at 42 and it's pressing above the highs of the day. It is, of course it does. Yeah. Because at the end of the day, that's what pays the bills. Yeah. But it's much of the, shall we say, much of the much of the stuff that you see me do here has been done before under the shade of my night lamp in my office, far away from YouTube and social media, to the best of my ability, attempting to take the guesswork out of the game. There's some benefits to this way of working. One of them being is that you train with focus. So for example, if I was looking at the Nasdaq and let's say I was relatively new to this game, sitting there experimenting perhaps with settings on a stochastic indicator because I felt that was an intriguing way of deriving buy and sell signals. But it becomes very quickly a somewhat pointless exercise, because the shortcoming of stochastics is that it'll very quickly reach what we call overbought or oversold during trending days. But it is precisely excuse me, is precisely in the trending days where at least traders like me love to operate and really push the boundaries. Or trying to figure out, well, should I be a buyer down here because there's a crossover between the fast stochastics and the slow stochastics. But the problem with this approach, in my mind, is that you don't know when that's going to take place, if at all, during the entirety of the trading day. And what I have come to realize through introspection, through personal observation, is that a typical trading session, depending on whether it is in the US or in Europe, is anywhere from 6.5 hours to 8.5 hours. But to stay focused for such an extended period of time is practically impossible for the human mind. To stay so devoted and focused on a task for more than 20 minutes is stretching the boundaries of plausibility for most human beings. So I find that by playing to my strengths, I deploy situational analysis because I know exactly when my setups are going to occur. They will occur on the second 15-minute bar. They will occur on the first 5-minute bar. They will occur on the 7th 15-minute bar. And thus I am able to preserve my energy to when it really does matter. Interestingly, the school run long has triggered at 23,781. With a stop loss at 23,740. I can't trade it because I got no money in the account. Interesting to see what the FTSE is going to do from here, because on the 15-minute chart, the high on bar number 2 was 9,221, and sellers came in just above prior bar high. And I think for the briefest of moments, my first bar negative position was in profit. For the briefest of moments. You will notice that if you contact me on Telegram, send me comments, send me messages, you're going to get an automated response now. This is because I no longer want to engage with questions in general. I found that they were distracting, they were noise to my concentration, and the message you're going to get is an automated message that basically says, this is who I trade with, this is when I trade, this is where I trade, and here's an access to the 4 Telegram channels that I have to my name. It's a bit curt, a bit blunt, but unfortunately it is a necessity if I am to continue, which I very much like to do. It doesn't mean that you get one of these messages every time. It is set that you get it if I haven't heard from you for more than 7 days. You're more than welcome to email me if you have something that you pressingly want to ask me. But otherwise, I am no longer contactable. I have taken that decision with a great deal of sadness, in truth, because for most parts I've enjoyed the conversations that I've had with people. I've gained a proper perspective on the haters. One of the reasons why I took time off. I have had all sorts of distressing communication, people threatening me, threatening my life, people expressing their undying love for me, wanting to marry me. I've had men sending me indecent images of, their holy parts. I've had people who have threatened to kill themselves unless I help them. Sadly, I had one that actually did that. And all of that took a toll on my mental health and distracted me from what I see as my true purpose with this engagement on YouTube, which is to trade live and explain why I'm doing what I'm doing. And so a decision had to be made. And that decision, unfortunately, meant that some of those wonderful conversations that I have had with truly gifted traders or people who are actually genuine in their pursuit of trading excellence had to be cut away. It doesn't mean that those people can't get hold of me. They just simply have to email me now. To me, that was a price that had to be paid if I wanted to continue. So my FTSE position is underwater a little bit. My theoretical DAX position, whether you took it down here near the low of 2, and I don't think I made an actual call on it, but I just said that if we traded below 42, I would want to be a buyer. We didn't actually trade below 42. We traded as low as 45, and that was it. And then I would have had a long position now in the DAX at 781. It has gone as high as 799. If I had bought at 81, 82, 83, would my stop loss have moved up when I was 17 points in profit? Probably not. Once this trading session is over, I'm going to get on the chat and ask TD if they can identify my deposit, if it has even arrived, and can they please deposit it on my account. So we're ready for the US session. So I suppose you could say that this morning I am not Tom HOUGAARD, but I'm a Chinese knockoff called Tom Poor-Guard with my 50-pound account balance. Yes, very funny. I'm hilarious. So thanks to the person that actually managed to send me that joke. It was quite a good one. At this point, I wouldn't mind just having a look at what else is going on in the European indices. So, Eurostock, unfortunately, Eurostock doesn't trade on TD365 during the night, so I can't establish an overnight range. I want to show you the French index. As you can see, it stops trading the previous evening at 9:45 European time, and then it opens again at 8 a.m. European time. So it isn't possible to do a conventional overnight range. But I suppose you can take your cue from what the DAX is doing. And we can do Spain. And it too doesn't provide an overnight range. Here's the Australian ASX. I've been working extensively on establishing parameters for trading the ASX on a school run. I suppose one day I will show that research. Anyway, let's get back to the FTSE and the DAX. Here's a daily chart of the DAX. And I guess the DAX is trying to push towards the highs of Friday. If you're interested to see how, let's remove this stochastic. Don't want anyone to think that I'm using that. If you want to see how the DAX is trading contextually against Friday, so here we are. This is Friday's sideways, and then non-farm payroll released, and we are pushing towards the highs of the day. Shock horror, I think my FTSE position is in profit. Of course, I'm mocking myself a little bit here. Hope you don't mind. Don't take myself so seriously. But there you go. And I'm on a staggering 55 pence. Not even sure you can buy anything meaningful for 50 pence. I will show you something that I personally find interesting. I like to go back in time and see how the DAX is traded on the day following an event. So for example, the last non-farm payroll was the 1st of August. And so here's the DAX the following day, which was on Monday, obviously. That's what we're seeing here. So what's interesting now about the DAX is that we are pushing below the school run bar at 3. And this is normally where I would have a stop loss, but the reality is I wouldn't, because I would want to be a buyer here. So if I had bought the DAX up here at 82, normally stop loss would have to be below here, but that wouldn't make any sense because I actually want to be a buyer below bar number 2, which is the school run bar, this one here. Because if I hadn't had a position, I would want to be a buyer down here at 23,742 or below. And it does mean that if you had taken a long position up here, your stop loss has to be bigger. Because in my experience, having gone through, dare I say, more than 1,000 samples, the odds are overwhelming that buyers will step in below bar number 2 if it is tested. So far that does seem to prove to be the point. Bar 5 went just below bar number 2. But of course, you can't not have a stop loss at all. And so where should you place your stop loss? I have an answer to that. I am operating with a stop loss in that, in my experience, works well. And of course, you don't have to actually engage in reckless trading by having a double up position. You don't want to add to a loser. So if you bought up here at 23,782, you don't want to buy again at 742 because that's adding to a losing position. And you may have factored your risk into the size difference between your entry at 82 and a conventional stop loss at 42. But my research suggests that a 0.2%, sorry, that should be, call that 800. Actually, that is a load of nonsense that I am doing right here. Let me do that. 23,800 divided by 100, and you divide that by 5. So a stop loss below bar number 2 of approximately 50 points. If you already have a stop loss of 45, 50 points, then the stop loss turns out to be approximately 80 to 90 points. If that stop loss is too big, then just stick to what you're doing. Be stopped out. But I am not advocating taking a short position here because we are above the overnight range. It'll be interesting to see how this pans out now, because this is actually a real challenge now to my work. And we'll see how that holds up. So just to be absolutely clear, I'm arguing that this bar here, which is bar number 2, the school run bar, that I want to be a buyer below the low of 742. The reason why I want to do that is because I consider the DAX trading above and closing above the overnight range more important than a break of bar number 2, which is the conventional school run bar. And as a result of it, I would want to be a buyer down here if I had any money. If I had any money in my account. That I don't, still not. But if I place a purchase below 23,742, where would I place my stop loss? And I, through experimentation, argued with a stop loss that is based around the overnight range, the length of the overnight range. And you can see the length of the overnight range is from 736 down to 667. So that's approximately 60 to 70 points. Or alternatively, you have a stop loss of 0.2% of the existing price that the DAX is trading at, which is, for all intents and purposes, 23,800. And that means a stop loss of about, let's round it up, to 50 points. Now that is so relevant, just checking what the FTSE is doing. Very little. what my research also suggested was that if I'm a buyer at, call it 740, just so we're dealing with round numbers, and I had a stop loss 50 points away, that means I would have a stop loss at 690. Gotta place the cursor where 690 is. There. If the market traded down to 690, it would be advantageous for me to have a stop and reverse, or as I call it, flip the switch. Meaning that if we traded at 690, I would flip over to the short side and I would bet on more downside. That occurrence is not very frequent, which I suppose is why it works, because it wrong foots the majority of traders. I'm just going to take a break of a few minutes. Okay, I'll let the account just be where it is, but I just need to take a few minutes break. Okay, I'm back. So while I was away, the DAX traded below the opening range at 27. I'm still of the opinion, excuse me, that I want to be long the DAX. My FTSE position is, well, you know, when you're trading half a position because you're waiting for your check to clear, it's not overly exciting. Just trying to find some data for you, 1 second. Of course, a scenario like this could take a while to play itself out. I would love to show you some data, but I haven't got it on this trading machine. So I'm going to have to find it. So what we're dealing with today is a market that trades above and closes above the overnight range and has a positive bar. It triggers along at 81, goes as high as 91, comes back down again, takes out the low at 42, and is now settling in around this area here. My work suggests that I want to be long below the low of the school run bar, which is low as 742. But if we trade at 690, I want to be short. Excuse me one sec. I'm back. I should perhaps spice that with a comment or two. It's not that I don't, in my research, factor in the possibility of a 10 or 20 point gain. My contemplation rather is, when making a decision like this, is where's the money going to be made? Where's the more substantial move going to make? And I argue that as long as we hold above 690, then we would favor the long side instead. My FTSE is not really doing anything. I bought the FTSE below, or wanted to buy below 9221.5, which is the low of the first 15-minute candle. And, well, as you can see, I've been mostly in loss. Right now, marginally in profit, but overall not a market that seems to be overly keen on doing anything. Can I just, for absolute transparency, say here, I'm not in a DAX position myself right now. I haven't been long. I haven't been short. I haven't traded this for myself at all. Not on the account that you see here, which has no money on it, nor on the other account that I trade behind the scenes. Because, believe it or not, I withdrew the money from that account as well, because I really wanted to have a complete break. And I knew that if there was money in the account, oh, just gonna trade this setup. Oh, there's an opportunity there. And I actually wanted to step away and give myself a complete break from it so I could look at the market and my research with fresh eyes. That is about to change today. No doubt about that. What I like about the live trading is that it's very binary. There's no, oh, if you had done what I did there, then you would have. And as human beings, we tend to want to mask over our failures and accentuate, highlight our good features. But when you trade live on a real trading account, there is no hiding. Did I make you money? Or did I not make you money? And actually, I regret that phrase, because I don't make you money. You make you money. I just show you what I'm doing, and you choose to do with that information as you please. But when you have a good day, whether it's inspired by me or inspired by doing the opposite of what I do, that is yours to own. You're the one that acted on it. So this is the first session back. The market is relatively active. And I am favoring the long side in the DAX. I got no money to back up my call. But I'm sure they will drizzle in during the day. Did you, fine ladies and gentlemen, take a look at the full moon yesterday? It wasn't just a full moon, it was also a lunar eclipse. So for those of you who live in Europe, I imagine that you saw that wonderfully. I certainly did. Would you like me to just cast a view on the 72-week cycle in the Dow Jones Index? So here's the Dow. And if we count forward in weeks, we could take this obvious low here, and we count towards 72. We get this point here. Not much of a major high or low, this one there. So I imagine that the next installment, and there isn't really anything majorly obvious over here, but it would probably be this one here that is launching about here. So that would be this, call it, actually if I use the highest close, which would be this one here, and I count forward, then it would be this high here. And again, I don't think that, I didn't have this as a, oh, this is a really major high at all. You could be cynical of my method, and of course, if you decide to publish your material, brace yourself for criticism. But if I count backwards from this major high here, did that actually work? Let's see. There's 72 is here. Actually 71. I do allow one on either side. So you could say that this high here was a result of this high here, and this high here, was that anything? Nah, definitely not. There's this point here. And what about this low here? Is that anything? And I would say no. So 3 observations, 1 nailed it, 2 did not nail it. Not exactly a showstopper, I would argue. And unfortunately, I don't see anything in the cards that will alert me to this market is about to have a major turn. Right, DAX traded up to 62 and is now trading back down. It seems as if it's, for now, settling somewhat into a trading range. So maybe this is the point where I bid you adieu for now. I will look forward to trading with you again during the US session, and hopefully by then my funds will have received into my account. My FTSE has just gone, no, it's positive. I think I'll just get out of that and just say, okay, that wasn't really anything. And as I don't have an active DAX position, I can't really do anything. I hope my commentary was of interest to you, and I'm back when the US markets open in approximately 5 hours. Until then, look after yourself, stay strong, and I will see you later. All the very best. Bye-bye. Actually, before I go, should just say that I have seen nothing here that would want me to be on the short side of the DAX. If I trade below 23,690, I would want to be short. Until then, nothing. Okay. Bye-bye for now.